Welcome to another episode of Equity Mates, Watchlist Wednesday, and looking forward to it as always. My name is Bryce and I'm joined by my equity buddy Ren. How's it going?
I'm very good, Bryce. Good to be back for another episode. Watchlist Wednesday, our favourite time of the week.
Yep.
We get to speak to an expert investor and hear about 3 stocks on their watch list. What more could you ask for to get through your hump day?
Hump day, love it. So to kick it off, it is our absolute pleasure to welcome to the studio, virtual studio I should say, Junbei Liu from Tribeca Investment Partners. Junbei, welcome.
Hello, how are you?
Very well, how are you going?
I am doing very well.
That is good.
Considering the lockdown.
Yeah, all things considering. But look, gives us more opportunity to, I guess, get more experts on the show because usually you're all buzzing around being very difficult to get in contact with. So we appreciate your time. Watchlist Wednesday, as Ren said, and the format for today is 3 stocks on your watch list, what the stock does and the thesis as to why you find it interesting or perhaps see it as a good investment opportunity. So let's kick it off. The first stock is Aroa Biosurgery. The ASX ticker is ARX. So what does Aroa do and what's the thesis?
Absolutely. Aroa is a little biotech company that's it's got a very special product that's already been used around the world. So the product is used in the severe wounds repair sort of markets to help the wound to repair much faster and much more efficiently. And they've got really strong clinical data around the world and demonstrating how well this product is going. Now, it's already been used in over 4 million surgeries around the world, and it's selling in many countries, and it's got license to sell in many countries. This company is coming out of New Zealand. It's listed last year, has done incredibly well on the IPO, and then we think the future is enormous for this business. Some of the interesting comparison you can draw from this one with a larger peer, which is called Polynovo, and Polynovo has a much larger market cap. However, it doesn't have same amount of clinical study that's proven the product is great compared to Aroa. Aroa being the smaller player, at this point, it just still started to getting interest out of the investors because it's a lot of times it takes time for investors to get to know a little company. And the company is now selling in the US, and it has over 30 licenses around the world, and just recently, going to add more of a salespeople to push one of its strong products across different places, and this company has an incredible amount of future, just given the indication it's been demonstrated and the amount of demand it's got for its product. This company's earning also has a reopening play, this sort of type of a word that you often hear from the professional investors at this point is about reopening play. What does that mean? Reopening play means, the company's earnings being impacted by the lockdown of the pandemic. And so hence, once we move past the pandemic, their earnings will jump significantly more as we move towards a normalized world, and this company will have that play to it. Aside from the structural growth that it's already underpinning its earnings, the company will grow, more than 30% for many years to come per annum for many years to come. And our view is that this company actually perhaps won't even be listed on the ASX with its track record and the way it's growing, simply because it's got such a strong suite of products that is very demonstrable of the its efficacy for the market it's targeting.
I love that company, Junbei. We've actually interviewed the Aroa Biosurgery CEO, Brian Ward, on the Equity Mates podcast. So if people want to hear more about the company, go over to the podcast and check that one out. We'll move on to the second company on your watch list, Junbei, and that's a company that everyone watching will have heard of. That's Qantas, ASX ticker QAN. Probably one of the most discussed stocks in the Equity Mates community, especially with all this conversation around, reopening and travel coming back online and stuff like that. So you probably don't need to tell us what Qantas does, but would love to hear about why it's on your watch list.
Absolutely. Look, Qantas is pretty straightforward. It's on the watch list is for a couple of reasons. First of all, when I talked to before about the reopening play, airline and travel, this whole industry has been decimated by the pandemic, and people can't travel, and then the Qantas had to stand down a lot of its staff and the like, and so severely impacted. And as we come out of it, we should see incredible amount of earnings growth. Now, we have seen a lot of survey done across consumer here in Australia and globally that there's incredible amount of pent up demand for travel. Recently there's one extensive survey done around Australia is literally showing consumer has saved so much money in the last 12 months, something like 10% of our GDP. They have spent some online, incredible amount online, but still they save 10%. This compared to normally we save 2-3% of GDP. So incredible amount of money saved for what? They want to go get out of their house. They want to go travel, and so this travel intent is going to have a huge pent up demand once we are allowed to do so. Now, what's amazing about Qantas in that whole space is that Qantas doesn't require the full assumption of international travel to return. Qantas makes a lot of its money, actually majority of its money, from domestic travel. As long as we can come out of the current latest lockdown, we can travel in between our states, you will see earning will pick up significantly. And what's also amazing though, we always look to companies that has come through this pandemic, become a stronger company, because we know pandemic will pass eventually. We've got the vaccine, we got all of that indication that things will get better once we move past it. But if a company can come through this period, become a stronger, leaner business, that means it makes you much better for the future earning years. When the demand does increase, your margin will grow, your revenue will grow. That just makes you much stronger business, and then that means the share price upside is so much more significant, much more skewed to the upside. So that's why Qantas is a very good play for that domestic reopening. Now, what's interesting is that this thesis has been around for the last 12 months, and yet the current share market, there's a lot of short-term investors around looking at the short-term trading. So the latest lockdown obviously have impacted the share price. It just represents opportunity. We think that heading into the reporting season, this company will give pretty clear picture of where things might stand in terms of the costs and the like. And I think the current share price just gives you great leverage into what is to come in the next 12 months.
Yeah, it's an interesting one that's been on the watch list for many in our community, I'm sure. And I think it's one that is often sitting there with people wondering when is the right time to pull the trigger. So great to hear your thoughts. To close out, Junbei, we've got another very well-known Australian brand, and that is Domino's. Love to see this on the watch list. Love a good Domino's pizza. So we all already know what Domino's does. Why is it on your watch list? What's the thesis there?
Look, Domino is just such a great innovator. They're at the forefront of innovation. They invest, and then they find the best way of doing business. That's why it's been such an incredible company. Yes, they sell pizza at $5, but over the years they shrunk the pizza, they changed the filling and all of that, and then they innovated. They created a new menu. They got their French chef, and it's just a great business that invests in its process, invests in what makes it exciting, invests in how it delivers to the consumer, and then it replicates in different markets. Because we all know it's a great business in Australia, makes lots of money, but it's mature, right, within Australia. What they have been able to do is expand into Europe, and then now they're building into a scale, and things are going very well for them. And they went to Japan, and Japan was pretty tough initially for them, but now they have demonstrated they're able to deliver good growth. And then the pandemic in the last 18 months has really pushed, has actually really pushed the investor, or actually pushed the consumer to use more of their products, and become part of that, have that part of the network effect. We just think it's an incredible business that have repeatedly demonstrating its ability to invest and grow its network. If including the Germany, the French areas where they have expanded to, I think the share price should be a lot higher. And recently they made an acquisition as well. They bought into the Domino's Taiwan license, and we think they will do very well there as well. And there are many other licenses around the world for them to grow into. But even without taking into account that, we just think within the existing network, there's plenty amount of growth for this business. And it's almost a quality company, quality blue chip company that you should just always have in your portfolio.
Amazing. It's always one of those questions about how far can a pizza company go, but it's just staggering. I remember when we were at uni and the price was $20 or something, and
it's
just gone from strength to strength.
It just keeps on growing.
It's not just you. It's like, this is a company that actually for years it's bifurcated. It's bifurcated investors. There's a lot of short sellers thinking this company will fall, and then there's all these transitions. So lots of investors were skeptical, but they managed to proven themselves over this many years and shown that they can replicate this model in different markets, which is, I think it's quite incredible.
Remember when Bryce and I were at uni reading about Domino's all the way back then? Don Meiji, who was the CEO at the time, could still be the CEO, should have checked that. He was talking about Domino's being a tech company, not a pizza company, which at the time, I guess we didn't put a lot of thought into, but I feel like Domino's has really proven that. Is that still how they're positioning themselves? Are they still trying to present themselves as a tech company that sells pizza rather than the other way around?
Absolutely. I think what's special about Domino is they recognize what's the value it delivers to its clients. It delivers fast food. It delivers quality fast food and the ability for a consumer to track. And then the amazing thing is that while many companies 10 years ago worry about or sort of dismiss all this investment in tech, and Domino stepped up in their investment in AI, investment in delivery systems and the like, and then it paid off because consumer like to use this app, consumer like to track to see who's delivering their pizza, so all of that together just means it's a company that has a culture of investing in innovative ideas, and this is very, very important because culture takes ages to build, and it gives the investor confidence that going forward, it's not likely to be a business to get lagged behind, by not investing. So so that's, I think, is the key to success for this business.
Awesome. Well, Junbei, unfortunately, we have run out of time, but thank you very much for coming on and sharing those stocks with us and the community. To recap, we had Aroa Biosurgery, Qantas, and Domino's. So, look, it was an absolute pleasure. We've got you back tomorrow to chat about your thoughts on reporting season, so very much looking forward to that as well. Thank you very much.
Looking forward to that too. Thank you very much for your time today.
And that brings us to the end of our Watchlist Wednesday today. Ren, always great to chat stocks with our experts, and tomorrow we keep talking stocks.
That's it. And I did just quickly look it up then. Don Meiji still is the CEO of Domino's. Nice. So well done to him.
Well done.
An incredible track record. Always welcome on either the podcast or this show if he wants to join us. But until then, join us same time, same place tomorrow. We've got Junbei back to talk about all things reporting season.
See you then.